Indian real estate has been going revival of sorts since COVID. Major action post COVID has happened in the premium and luxury end of real estate. During COVID, everyone realized the importance of larger spaces, one extra bedroom, one extra balcony, and so on and so forth. And so started the demand for larger spaces, bigger sizes, and the emergence of premium end of the real estate. The premium and luxury end of the real estate is a growth story that has been happening for last 3-4 years and is unabated. It's going strong as ever. What's really driving this entire growth? What's behind the demand surge over here? What is driving the sustenance of this demand? And what kind of action is happening in this space? And what can you, as an investor or an end user, expect in this particular space to happen over the next couple of years? We'll tackle a whole lot of these questions today in our conversation. Namaskar, I'm Prasoon Kumar and you're watching this new episode of The Property Show on MBTV, world's largest real estate channel. Today, to take forward our discussion, which is the rise of HNIs and NRIs in Indian real estate, especially the housing segment. But before we begin, as usual, let's start with some important statistics on this topic. 37.8% year-on-year surge in luxury home sales of INR 4 crore plus between Jan and September of 2024. 28% of Indian ultra-high net worth individuals rent out their secondary homes, turning luxury living into a passive income source as well. A survey by an industry body indicated that nearly 62% of wealthy Indians are interested in investing in luxury real estate. According to a survey, 29% of NRIs preferred Bengaluru for real estate investment, and closely followed by Mumbai and Hyderabad. And a noticeable number of HNI and Bollywood celebrities are selling luxury properties in Mumbai, typically showing a robust real estate market there. We have a stellar panel of experts. Joining us is Mr. Manan Shah, who is Managing Director of MICL Group based out of Mumbai. MICL is a premier engineering, procurement and construction company headquartered there. We have Ms. Mananki Parulekar, who is co-founder of Claravest Technologies, which is again based out of Mumbai. And Claravest is a fractional real estate investment company launched in India in 2023. Fractional ownership, as we all know, has been gaining popularity of late. Then we have Mr. Kedar Chapekar, who is CEO of Aspect Reality. Aspect Reality undertakes a lot of development of premium residential and commercial buildings in Mumbai, and they also participate big time in SRA. So let's start this conversation today. Let me start with you, Manu. This premium and luxury end of the real segment, which has been doing so well for quite some time now, what do you think are the prime demand drivers over there?
Good afternoon. So, thank you for having me over here. See, there are a couple of things which has evolved in India over these years. Just to name a few to begin with, the most important thing is the regulatory norms. Now, after RERA has come in 2017, Indian real estate has almost got more or less some standardization and an industry norm which was missing earlier. So, a lot of things which you see today is very well organized. There's a lot more transparency between the home buyers, investors, and the developers. And at the same time, it's given a lot of confidence, especially in an NRI audience, because they are practically not based out of this country. They do not know much about the buy norms or the buying style. But RERA has helped them get all the documents sitting in different part of the world, get access to it, check whenever they want to, send it to your relative lawyers and all, and it's giving them a great confidence that they won't be part of some kind of a fraud or mishap or anything which used to happen earlier with a few people. Also, India's infrastructure story, if you see, from past 4 years, so we are based out of Mumbai, so I'll specifically speak about Mumbai city because that home bias connects to us more. Mumbai's coastal road systems metros, extension of sea link, your freeways, all of these things, if you see together, it's changing the dynamics overall for a consumer who was staying earlier at South Bombay can now work in Bandra. Now, with the future connectivity, which is going all the way from Coastal Road till Mud Island, somebody staying on the extreme western end and working in the extreme south end will easily be possible. And with these new water taxi systems, which are going to come up soon, I think it will completely change the dynamics. Now, overall, this thing will help all the pockets which were earlier not that keen on getting sold will easily start coming up, and NRIs are seeing these things as a big boost in price appreciation. Because see, at the end, there are rarely some NRIs who are actually wanting to come and stay in that house. They're ideally putting it on rent for a passive income, or they're ideally flipping it out in the market to gain the momentum out of it. So these are two, three things which are helping NRI not just invest, but they're getting healthy returns and they want to keep on churning this money back and forth again in the industry.
So we see this enthusiasm not only for Mumbai. Of course, there is equal amount of interest in Bengaluru, in Hyderabad, kind of real estate market as well, which is quite visible over there. Gurugram, of course, is where a lot of investments does come in from HNI. Kedar, I just wanted to understand from you, aside to the point that Manan said, which is really related to infrastructure and regulations coming in real estate and all of these giving fillip, do you think are there any other uh, uh, prime drivers over there as well? Say, for example, in case of Mumbai, would redevelopment open new land parcels, which will also give fillip to newer supply to come, which will again, kind of boost this? Or are there any such more nuances which are at play here?
Very good afternoon. Yes, I completely agree with what Manan has just stated. Now, besides this point, there are several other factors. Amongst the NRIs or the HNIs, there has been a marked change in aspirations when it comes to buying of a property, especially a home. Previously, buying a home, the focus used to be on the locality, on whether it was on par with their status symbol. It was more of a quote unquote snob value, whether the snob value was attached to the property that the NRIs or the HNIs were buying. Now, what has happened is that over the years, the HNIs and the NRIs, besides having the wealth, now also have a much higher level of exposure, of global exposure. The global trends in luxury living, they are very much more conscious about it. The aspirations have changed. Previously, it was more about buying the FSI area. Today, it is about buying the product. Whether that product is giving you the kind of luxury that you want, the amenities, whether it is eco-friendly, the security that goes with the property. These factors play a very, very important role in the new age NRIs and HNIs. They no longer look at it as just buying the FSI. They are looking at that home, as I would say, as a product. So this is a marked difference between the older generation of high net worth individuals or NRIs and the today's next generation of HNIs and NRIs.
Okay.
This is one of the major differences which has come about.
Okay, so rather than selling floor area as a commodity, now is the end product which is finding a lot of traction. Mananki, tell me, fractional ownership is a concept which enables a whole lot of mid-income group also to participate in larger projects. What kind of action are you seeing from HNI, NRI point of view in the kind of projects that you guys are working on?
I think, first of all, Prasan, thanks for having me here. I really like the question. As you rightly said, definitely fractional ownership is giving a lot of exposure to mid-income level folks so that they can enter real estate by not investing so much high capital upfront. But especially NRIs also, we are seeing a lot of traction and they are interested in this is because most of the fractional ownership platforms, they are doing data driven investments, which is what NRIs love, right? How clearly you can tell me that what is the potential of this location, what has been the historical appreciation, and why the projection is high for this particular location. Second is NRIs also like that they can now invest small amounts in multiple assets. So it can be spread across not just like the well-known real estate beasts like Mumbai and Delhi, but now it can spread over to a lot of tier 2 cities where they are seeing growth in news channel, newspapers, whatever the government is doing with respect to infrastructure changes. Now they have access to invest in multiple locations at the same time. So we do see a lot of NRIs also being interested in fractional ownership.
Magic Bricks recently released a report on emerging markets, and we saw that some markets like Goa, Lucknow, and a couple of markets in South are finding a lot of traction as far as real estate growth is concerned. I Aside to that, for example, say in case of Mumbai has been expanding, and it has been expanding up north, not only up north, but is also now expanding on the eastern side of it. With new airport coming and the entire Ural area, and the with connectivity, Atal Setu, etc. Entire new area is getting opened up. Tell me, Manan, the interest of HNIs to invest in India, because there are, as Kedar was saying, that the exposure is global, right? And therefore, an Indian product today competes not only with another Indian product, but also competes with the product which is based out of Dubai, which is based out of Singapore, which is based out of maybe London, and so on and so forth, right? How much do you see a trend of HNIs wanting to invest in India, even from an ROI point of view, and seeing this as a viable investment opportunity today?
Many countries in the world actually don't have this FT concept. India is one of the few countries where you see people actually doing fixed deposits. And now they're slowly moving towards SIPs, slowly moving towards mutual fund investments. Eventually, in certain countries like Japan, in fact, it's negative. So these people don't want your money just parked in the banks. They want it to be utilized into the capex systems or the economy, so that economy boosts are happening. See, India's power shift has happened, and if you see the current millennials are under the control, who are having the money power, they are actually the spending power has increased dramatically. And I'm talking about people who are not just residing in India, but outside India also. So especially the NRIs, a lot of people are going abroad, studying over there, settling down, making money in dollars and pounds and euros, and they are getting the money back in the country also. Now, eventually, they also wish to own a house in India, maybe for their family, maybe for themselves, that they might come in the near future and settle down over here, and they make some good, healthy, life savings for 5-10 years. So this is the kind of trend which we've been seeing recently, because when I interact with a lot of people who are staying abroad, like recently I just did a transaction with one of the guys. I think he was mid 30s age, and he just bought a 25 crore apartment with us. And he is basically working in his own startup. So he's flipped out multiple startups, did some valuation and made money out of it. So these are the kind of people who have actually started seeing India towards the growth shift. So ROI is definitely one thing which they are looking at, because rather than keeping money, see what happens is, if you've kept your 100 rupees in a bank account in India, you are making post tax around 4.5 to 5% maximum,
right,
as the return. The same money, if you're keeping abroad in dollar, practically in the past 10 years, if you see the graph, you've made equal amount of money by just keeping the same money in a dollar form, because the dollar is always appreciated. So there are two things for NRIs which matters the most. One is whether they get the money to India. That means it's a depreciating currency in a way. So the return on the investment should be far more than the currency correction.
right.
That's one thing for sure. And secondly, why do they intend to buy a house? They ideally, I have always seen, the ambition is to secure the family. Like a lot of times I have seen the parents staying here, only the younger generations have moved out. Or they're wanting to own a house because their intention is very clear. In 5 years, 10 years, I've made some good money in Europe, UK, or US. I'm going to bring back all the money in India, and periodically with some EMIs and some small bits and pieces money, I'll build a house for myself. So these guys are definitely an integral part of the sales strategy for any developer today. And the focus have also gone on them. In fact, there are a lot of NRI shows which we keep on doing. So Dubai is one of the hottest hub right now for any Indian developer, where you will see shows happening about property every 3 months. Singapore is the second base. US, slowly people are graduating. So there's a lot of education still which needs to be done towards NRI. I would say we've not yet been a ripened market for NRI audience compared to the other international cities in the world like Dubai, Singapore, and all of these places. India is on the verge, and with these small changes and becoming green, sustainable, we're seeing a lot of vertical growth happening in, hyper connected smart homes are coming in the future, where you are seeing the technology right from automation to access controls to, smallest of the detail being integrated well, which these NRIs are very comfortable used to living in these foreign countries. Is now slowly becoming a trend in India, which they're getting slightly tempted towards their home country, and I feel the curve will keep on moving up at a slow pace if the developers have shown a good integrity towards future growth and development in terms of holistic development. I'm not just talking about building more and more FSI. I'm talking about getting good economical systems, getting good ecology right, where you're walking to work, you're walking to retail, everything is integrated well. That's when I see these NRIs coming down more towards India, and it can be across multiple cities across the country.
Mananki, tell me, uh, in the market, again, keeping HNI and NRI audiences in mind, what is the kind of emerging trends that you see from their investment choices point of view?
From like market perspective and trend perspective, definitely one of the trend that is coming up a lot these days is branded residence, right? Not just having a tier one developer building tier one assets, but is there something tier one developer with asset, but with also an hospitality brand? Can you, it's not just about owning an asset, but can I also get some services involved in it? So I feel that, this is a new trend that is coming up. A great lifestyle. Second is, can there be cleaner air, even though if it's in tier one cities? Can you create more ecological gardens? And third is obviously, can I get some services along with it, like cleaning services, maintenance services, and stuff like that?
So, in terms of their, uh, in a way, choice or preference of investment right now, some of the pointers like, Kedar is saying that probably tier two markets could emerge as a destination for investments, attracting investments from HNI, NRI customers as well.
Yes.
But again, going back to, I just wanted to really understand this entire dynamics of how it's playing out between residential and commercial, because even in Mumbai, you see a whole lot of action, a whole lot of land parcels, being developed for commercial purposes now, and there's a lot of investment that kind of comes in from HNIs from a long-term growth point of view. I wanted to really understand this entire commercial aspect and how robust the proposition there is for a long-term sustained growth and return to come from an investment perspective.
Definitely. I think I was 100% aligned on what Mr. Kedar was saying. That if it's like a residential investment, tier two cities are the hotspots right these days. As we know, in the current year, Lucknow, Indore, Coimbatore, all these places have gotten a bare minimum appreciation of at least 15 to 20% on an annual basis, which is unheard of. HNIs and NRIs would love to actually invest in these locations for a couple of reasons also. A, they can get a bigger space at a cheaper cost than what they would get. B, it is obviously the appreciation aspect, and C is, all these NRIs and HNIs are working generally in tech companies outside. When they see that their companies are actually owning offices in these cities, they will indirectly, invest in those cities because they know what the kind of growth that uh, Amazon and Apple and all these companies bring in when they go into tier two cities. Now it comes to commercial asset. Yes, commercial assets great with respect to probably rental yields. Rental yields you could expect anywhere around 6 to 7%. If it's a grade A commercial, still it has to be grade A commercial to fetch that kind of return. But NRI is also looking at grade A commercial then cost about 30 crores, 40 crores. Can one person own that type of asset? Let's say one person owns that type of asset, get those kind of returns. What is the exit plan? So in that kind of sense, I definitely feel that owning great residential properties in really good markets, tier 2 markets, can be a better choice for most of the NRIs than tier 1 grade A commercial.
Okay. Manan, the long-term prospect of investment in commercial, and I'm not only talking about tier 1 towns, but also emerging centers, for example, the suburbs of existing tier 1 towns where there's a lot of action coming now happening. How do you see that? Is it something which is it a case of oversupply at this point of time, and therefore, as Nanki was saying, that only grade A kind of properties can fetch you a certain kind of return, or is there still enough headroom left for action to happen there?
No, I agree with what she said, because I'll tell you there are two kinds of properties which is moving currently. One is either the affordable sector offices, which is 300 square feet, 400 square feet maximum, which is falling in the bracket between, like in Mumbai, if you consider, it's approximately around 1 crore to 1.5 crore. That is a ticket size which is selling. The other properties which is doing well is not the strata offices, it's the leased assets. Again, you have to be a AAA player in the market where you've got these Morgan Stanleys of the world and JP Morgan and all of these top players who are already on your books, and you are doing 1 million square feet of a lease offices. If you go to build office spaces in current scenario, which is up for sale, which is like a 5,000 square feet, 3,000 square feet, these offices are not selling. That's the hard reality. So what's moving is either the extreme low end ones, or you can go in for the lease ones. But the lease people, there is plenty of options available today. Because today, if I go to Goregaon or I go to BKC or Andheri East or South Mumbai, there are plenty of IT parks. There are plenty of big commercial assets standing, absolutely ready to move in, which is fetching these prices. Now, what people are ideally seeing is they've created BKC as a flagship location, and they're considering and comparing the rental prices with BKC in every corner of the city, which is not possible because BKC is developed as a modern Nariman point. Earlier, the same situation used to be at Nariman point, where the rental were around 200, 250 rupees. Today, it's around 400. BKC is at around 600. So what people are considering is, if this person is getting 600, even I will fetch 600. But if you see the size comparison, the person who's putting it for rent at 600 rupees is sitting in 1 million square feet of an asset that's created, which is a good looking asset, which has good amenities, ready possession, and immediately you can move in. But if you go to replicate that model, there are bright chances that a developer can fail. So even I feel commercial has always been extremely volatile market. I always see good returns coming in from residential side, because when have you ever heard that commercial property sold at a record breaking price? You've always be hearing commercial property leased at a record breaking price, but never sold at 1 lakh rupees on a square feet. The most expensive office space today would be at a Worli, and that is also available at 65,000 rupees on a square foot. So practically, but if you compare the residential price of Worli, which we've been hearing in these newspapers today, 2 lakh rupees, 2.5 lakh rupees, 1.5 lakh rupees on a square foot, there is no comparison. But I've never seen a person coming to me, because even we do commercial, that I want to buy a 1 lakh rupees on a square feet office. I'll have a lot of people coming in to buy my Pali Hill property at 1.5 lakh rupees also on a square foot. So I think commercial is a very risky. If you know the game, if you know it well, and if you're sitting on a good land, which is owned by you ancestrally, then it makes sense to put in so much of capex of building 1 million square foot of an office space and then leasing it out.
That's an interesting point, Kedar. You have been talking about emergence of tier 2 and 3 cities from residential investment point of view. Tell me, for HNIs and NRIs, how much sense does it make to really look at assets, residential assets developed in a Lucknow or a Vadodara or a Coimbatore, etc., from a long-term capital appreciation perspective?
See, the cities which you just mentioned right now, in terms of economic growth, they've been comparatively late starters. So I would say they have kick-started their economic growth only recently. Now, whenever any city has just kick-started its economic growth, the graph of your real estate appreciation is bound to grow exponentially before it settles down or flattens out, like in the case of tier 1 cities who've been developing for quite a period of over a long period of time. So to enter the tier 2 or the tier 3 cities right now, especially where your entry level is relatively low, where you don't have to put in a large amount of money to get a property, but the year on year appreciation would be far better in terms of the growth as compared to tier 1 cities. Now, also we need to understand that because of the growth of the Indian economy per se, and our middle class is increasing. Predominantly, this middle class comes from the tier 2 cities.
Correct.
Maybe their earlier generations, especially the white collared people, had migrated to tier 1 cities for work. For them, they still have close cultural ties with the city of their birth, with the city of their education. They also see it as a good investment proposition. So buying a home for them is not just a second home, but it is also a wise investment option. So if you look at it holistically, the tier 2 cities, I believe, is going to be the engine for growth of the real estate sector, especially in the residential segment.
Okay, all right. So yes, the action is definitely in tier 2 towns. Mananki, it's not, commercial, of course, as Manan was saying, has a certain characteristic to it, and therefore that market plays out in a different way. And he said, for example, his Worli property can get sold for about, say, 2.5 lakhs rupees per square feet, right? Now, that doesn't make it cheap in any which way from an investment point of view. And if you keep hearing the story where flats are being sold for 100 crores, 200 crores, 300 crores, and beyond as well. And these stories are no longer limited to South Mumbai alone anymore. These things are happening in Gurugram. These things are happening in parts of Hyderabad and Bengaluru, and all markets have developed this luxury hotspots within their own geographical areas. Because the ticket sizes are so high, are you seeing any action happening as far as fractional ownership is concerned in the residential space, where HNI or NRI community would be interested in looking at these asset classes from a fractional ownership point of view, and therefore the development of this investment class?
Yeah, absolutely, Prasun. Luxury homes, vacation homes, second homes, these are all dreams of, Indian folks. Everyone dreams that, oh, I want to own a luxury home where I could probably go and visit over the weekend, even if like my primary job does not allow me, could celebrate some birthdays, some anniversary. Definitely, with these increasing price, it's not easy for even for a lot of HNIs and obviously NRIs to invest in this asset fully. We are seeing a huge shift that they are interested in investing luxury homes and second homes, wherein the rental is probably in par, or I would say even a little better than the commercial real estate. Second is you obviously have your appreciation of the asset because the asset there will always be a demand for a luxury home or a villa with a pool. And third is they also get access to these assets. They also can actually drive probably 3-4 hours away from their house and experience this beautiful location. Uh, Obviously, one of the things that we have seen is nature actually plays a lot of role. They want the assets to be, a little bit away from the city, the hustle bustle. They wanted to have cleaner air. Want to have again services involved. Is there catering involved in all these locations? So we are definitely seeing a lot of interest from NRIs and Indian residents also, because now they can have multiple vacation home at different geographical locations.
Okay. Um, we have also seen that the Indian real estate now is primarily getting driven by millennials, right? And that's the primary consuming class as far as products are concerned. But over the last 2-3 years, it's also Gen Z which has started entering the market. They are in their early 30s and late 20s, and they are the ones who are experimenting with investment. One of our studies actually suggested that we do a housing sentiment index and home buyer sentiment index, and it came out from there that the highest index or the highest sentiment is amongst Gen Z to really invest in Indian real estate growth story and profit from it. Manan, how different it is to really deal with a Gen Z or a millennial customer as against previous generations in terms of their expectations, in terms of what do they ultimately want, and how do they look at real estate as an investment instrument.
See, when it comes to Gen Zs and millennials, today there are pros and cons both towards that. Now, in terms of if I speak about pros, these guys are much more open in terms of the area dynamics. I see a cultural shift happening from central suburb moving towards south Mumbai coming towards lower Parel, and so on. Earlier generation were very adamant and fixed about, say, example, they're staying in a Jain society, so they don't want to even move out of that. Now, there's no redevelopment happening over there. You don't see any, growth over there, but they are happy staying in their own ecosystem. So that's one big thing. Secondly, in terms of cons, if I would say, there's too much of competition today, and these guys are very choosy. So they want to get all the boxes ticked, but a lot of times these guys don't have the right appetite and the budget to buy. So a lot of times I see they'll tick, for example, all the boxes. I want this, I want that, I want this, I want that. But when it comes to the pricing, they're very skeptical on the pricing. Earlier, there were lesser options comparatively, and the prices were much more open. And now the pricing is like literally building to building. So each developer is competing with the other one. And secondly, the acquisition costs for these millennials and Gen Zs have gone way too high. So earlier, say a developer was spending around 700 to 800 rupees per click on online market. Now it's gone about 2,500 rupees on an average scenario basis. And secondly, since everything is open, again, it becomes a good thing where these guys are moving towards branded developers more. They don't want to buy in with a typical local developer. Yes, for smaller players, it's a difficult thing. But for larger players like us, it becomes easier because I don't have to convince him that what the brand stands for. Why are you paying some extra premium? Because he's getting the quality and a short delivery timeline and a lot of other things in coming into the picture and a lot of innovation which goes in. So I see a mixed blend. It's not that difficult to deal with them, and with markets getting adapted and matured over time. It was going to happen sooner or later. The early generation is going to phase out. The newer generations are going to come in.
But at the same point of time, this generation is far more exposed. As Kedar was saying, that HNIs and NRIs typically are globally exposed, and they have seen the best and best of best in a way. Technology also enables today for everyone to reach out to every nook and corner of the world anyway. And the popularity of programmings like $1 million listing, etc., just reinforces the point that there's an interest in investment in real estate assets, and people are looking at premium stroke luxury as one of the primary return instruments that they would be. Kedar, tell me, from market dynamics point of view, how do you see next 3 to 5 years in the premium and real estate segment unfold? Because that is where HNI and NRIs are primarily going to invest. How do you see that unfolding? Is there too much of an oversupply already? Because parts of the countries are already saturated with a lot of oversupply in that segment. Last 3 years, all developers have done is built premium and luxury end of the housing at the cost of mid and affordable segments anyway. So, is there a case of an oversupply over there, or do you think there is enough room for a story to continue?
I don't think there is an oversupply. The supply is increasing, but so is the demand.
Okay.
Again, thanks to our growing economy, and actually, I would say booming economy, the wealth is increasing. So the number of high net worth individuals are increasing by the day. And the first thing that a person, when he moves from just below a HNI status to an HNI status, is to buy a home of his dreams. And that is the luxury segment. So if you talk about, say, Mumbai will always going to be the most sought after destination for high end residences, for luxury homes, for what I had just mentioned earlier, which would sell as a product and not as an FSI area. Now, what are the attributes which go into calling a home as a luxury home or a high end home? Besides the area or the carpet area, it is also the location, whether it is overseeing, whether it's a sea view, it is on a Malabar hill, so many factors. And Mumbai being Mumbai, land, it's an island city. The land is limited. So there is no question of an oversupply coming into the luxury segment at all. I mean, take the recent case of an apartment being sold for 640 crores on Worli Sea Face. I mean, people immediately, translated it as being sold at 2.89 lakhs per square feet. So I tell people, don't look at it, 2.89 lakh per square feet should not be a yardstick. It is a product which was sold. It had its finer points, and it is those finer points which fetched it that price. It doesn't mean that you construct something right adjacent to it and it would be sold at the same price. It doesn't happen that way. Same is the case with Gurugram. Let's say, again, the high-end luxury segment in Gurugram is doing well. Mumbai is a global access point, whether it is airport or seaport. It's, you enter or exit from the world to and from Mumbai. It's always going to be the commercial and the financial hub. It is going to remain a commercial and a financial hub of the country. Gurugram, with its very fast improving infrastructure, and the infrastructure, I've been there, and it's really developed very well. The Dwarka Expressway and the Southern Peripheral Road, its proximity to Delhi. So you would still have NRIs or HNIs who maybe their business demand that they need to interact with the central government agencies or the central government ministries on a regular basis. They have the money and they would prefer to invest in some place like Gurugram, where the access to New Delhi and the corridors of power in the central ministry, it's closer. So I do not see oversupply at all. In fact, I would see more number of high-end luxury premium properties being developed, and they would definitely have a market. Most certainly they would have a market.
Manan, what's your take? Do you think this luxury and premium segment story is going to continue for next say a decade?
See, regarding luxury, it was always selling, I would say. Just that now it's become a PR game more. I see few developers flaunting the per square foot number. It helps them do sales. So, it's fine. It's part of the business tactics which people use in. Earlier, the numbers were much more quieter. There were 100 crore plus transactions happening in the past many years also. But now, people are pulling the data from the registrar office, and then they're floating it out that this is a transaction, etc. So I feel luxury was always doing well. Yes, but you have to be careful when you're talking about luxury that if you're doing only 50 crore plus of houses, 100 crore worth of houses, there is 0.1% population of Mumbai who's looking at buying that. Now, the moment you have a 100 crore budget, you can put your finger down from any corner to any corner of the city,
Right.
any developer to any developer of the city,
Sure.
and you have 100 million options, for example. So, and every developer starts believing that he's my customer, and the same customer with different brokers is going to different developers just to sniff around the price, like what's the best price, am I not making the wrong decision, or comparing the products and his choices. So what we typically do is, to be cautious, I have always played in the margin game between 40,000 rupees to 1,25,000 rupees on a square foot, which always was there, which will always be there for Mumbai. Like I remember during my college days, Malabar Hill used to be 1 lakh rupees on a square foot. Nepean Road used to be 1 lakh rupees on square foot. This is like 15 years back. It still is. So there was no growth journey over there. But when we are doing feasibility, take a project, whether it's redevelopment or buying a land or acquiring some rights, that time I make sure that I have not considered more than this. Anything which is going to come beyond this is a pure bonus.
Sure.
But if the market crashes, whenever you ever heard that Malabar Hill or certain pockets pricing going below 85,000 rupees, you won't find stock.
Mananki, your take on this entire market scenario now, and is this growth story intact for next decade?
I think Manan and Kedar are really good in talking about like the supply and from the developer side. I just want to highlight this one thing that the investor these days is also becoming very smart. So investor, just because a certain developer or a certain asset is priced at an X amount, at least the young investor, the millennial, Gen Z, all these investors, they are doing a lot of data and research about what has been the historical appreciation. Either they hire a third party market experts, or they're doing their own like research, because there's so much data available right now. So investor is also getting smarter, so they also have this thing wherein I want to make sure that I'm doing my complete due diligence with respect to if my investment is going to grow or not, and then they are making decision.
Okay, great. We did have a great interaction, and the story that is emerging is the premium and luxury end of the Indian real estate growth story remains intact and is likely to have enough headroom to grow over next decade. We spoke about the emergence of tier 2 and tier 3 towns as investment hotspot opportunities emerging. Commercial doesn't seem to be finding favor with our panelists today from a ROI and return perspective. And there are various factors, including rapid infrastructure development and the growth of India's story. All these are contributing to a lot of interest in Indian real estate market, and that is leading to sustenance of this story. And this story is likely to be sustained as economy continues to grow and expand. So this is it from this year. I thank all my panelists for participation and sharing valuable insights. And we will come back to you with many such interesting and important topics on the Property Show. Keep watching MBTV and don't forget to like, share and comment.